CalSTRS Ailman, California State Teachers Retirement Systems, CalSTRS Chief Investment Officer. He joins us now. CalSTRS has, by the way, $331 billion in assets under management. It is the largest educator-only pension fund in the world. All right, we got all that out of the way. So why do you sound, Chris, like you're a little, I don't want to call it pessimistic, but perhaps not as constructive on the market as some of the parade of guests we might bring on here on CNBC?
Hey, David, I would say I'm realistic. Come on. This market is doing so well. Think about the fact that at the Fed pivot back in November, they were expecting 6 cuts this year, then only 3. Now some talk about maybe not even any. Market's taken that all completely in stride, set new highs. Now, so I like this market, but it doesn't mean it's going to grow to the moon. And I think that's what people have to realize.
Yeah, which means what in terms of if you had to sort of predict as how things will go for the rest of the year? Are we kind of done with the big appreciation, given the fact that, to your point, we may no longer get those rate cuts that had been assumed or almost assured at the beginning of the year?
You know, David, I realize now in my career it is so hard to predict the future. I think the market probably has some more legs to it because, look, everybody is betting on AI, and it's unknown what that's going to add to productivity. I mean, Jamie Dimon had a big statement today in his letter, so there's a lot of optimism. But look back, you know, over time, you're a market pro. The market can have a pullback of 10, even 15% during a bull market year. So I think people have to just realize it's not always going to be straight up, new high after new high. We're going to have some seesaw patterns. We may see a pullback. It's interesting. Everybody comes in buying every time there's a pullback.
So, Chris, is the general, you think, dynamic for the year going to be better nominal growth, more focus on growth than rate cuts, and then more volatility? I mean, do you stay, is your closeness to quality grow even from here?
You know, Carl, I'm surprised by the lack of volatility. We don't have that many 2% days. Normally, we've got quite a few of those during a year, at least 20, and we haven't had those. It's been this slow grind higher in the market. So it's going to be a combination. I think the Fed should back off a bit, but not a lot. And then we're having great GDP growth. There's just a lot of optimism about what AI can bring to the economy. I think we're ahead of the game, but the market always looks ahead. So that optimism is going to stay through the election. 2025, all bets are off. I don't know what that year is going to look like.
Yeah, well, as you point out, it's going to be fairly hard to predict. But when it comes to AI, you know, I hear sort of, I'm curious as to why you perhaps may not be quite as optimistic, I guess, on the productivity gains that many are pointing to as a real possibility here.
Well, it's hard to predict, David. It's just simply that. I don't know. You know, I think comments about having Einstein on your phone, and that is great. So we're all going to make better decisions. We've got to ask better questions. But it doesn't mean that everyone's going to be using it. And, oh, by the way, every once in a while it gives you a mistake and a problem. So it's going to make us better. It's going to make us more efficient. It is, I don't know if it's as big as the steam engine, but it is a major advance, probably as much as the iPhone. So we'll see. But it's going to take time to roll out. It's advancing very quickly. Companies are embracing it. Consumers, we'll see. I'm seeing slow adoption. It's been a whole year since the big excitement about ChatGPT, so we'll see.